Broadcast. Ooh. I want to welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton. Tuesday, April the 26th, 2011, 4 p.m. Eastern. What a day. What a day. They finally did it. The S&P 500 exploding, breaking through major resistance as we see here. And I got to tell you, I think that consumer confidence number was part of it. The S&Ps were up mildly going into it, but wow. Consumer confidence better than expected with oil prices exploding. I mean, it's a ridiculous the fact that we are going to hit $5 oil per gallon, gasoline, in the United States this summer. I think that's a fait accompli. But you look at this S&P breakout. Wow. I mean, this is a 200-day chart of the daily S&P. This is a monster breakout. And, as I thought we were going to hold. But listen, you got to reverse. When you know the market's breaking out, you got to definitely stop and pop. We were able to do that in the morning as the stock market was just looking too broken out. Able to buy that pullback. Aussie, commodity currencies reversing. Even though we had gold and oil, well, oil was up, I think, a little bit, but at one point. But to have, silver and gold both down, and to still have the market in commodity currencies at least up is pretty big. Pretty significant. But again, tomorrow the big day. Burn your ASCII. All other things really mean nothing except, of course, for the pound. That number that came out today was an abomination. CBI orders industrial expectations, -11. Supposed to be up 4. I got to tell you, a lot of the numbers coming out of UK have not been very good. I think that Euro sterling is now breaking out. It finally gave us direction yesterday. And markets now pricing in, I think, interest rate differentials. The U.S. is going to keep rates low. Dollar yen coming in on rate differential. Euro going up on rate differential. And cable is going nowhere. So really today, traded a lot with the macroeconomics of what's going on. From interest rate differential to economics 101 with the UK. So, the dollar, as we said yesterday, a couple of outside candles. And last night in Asia, oh baby, hopefully you listen to me, you would have had a nice Asia. That euro dollar got down to 144.92. Bang! So hopefully you're able to take advantage of that breakout in Asia. But obviously short-lived, and obviously we gave back a bunch. But listen, you have to stop and pop. I mean, take a look at this dollar index. Let's look at the hourly chart. Oh, don't freeze on me now. You son of a gun. It's going to freeze on me. All right, well, I'll just have to get rid of that then. I use my other chart. Oh, there we go. Okay. So you take a look at that. If I can zoom out, please. Come on. Of course, not going to show us Asia. I love it. There we go. So we had a nice little big pop of the dollar index in Asia. Euro really coming under pressure. And then, of course, meltdown. And now we've found ground. And basically traded with the S&Ps. So if you follow the S&Ps in Europe, so certainly when we rallied, all things changed. But dollar index certainly hovering at lows, not looking very good, going for the low we made 2 days ago. So this dollar index, I think we go lower first. Could we bottom on Bernanke? Is Bernanke going to deliver? Is he going to change anything? I don't think so. I really don't. I don't think Bernanke is going to deliver the hawkish tone that would make the market dollar bullish. No freaking way. Sorry. So we take a look at this euro dollar daily chart, hourly chart, and again, another one flagging at the highs. Look at that beautiful pullback. Sucked everyone in who was short into getting short. Listen, why it reversed? I sold it straight. The pop 50 pips. I said, let's sell it again. But you look at this daily chart. Another one. Gorgeous outside candle. I don't know what to say. I mean, talk about getting chopped up. I mean, listen, once we took out a certain level, once the Shiro took out that 30, 35 level, we had to get out. Pull back into like 46.10 and called it a day. So lost on that and ended up getting long and still long. And I think this euro dollar now, we take a look at it, new closing high. Looks just like the S&P's pretty much, broken out. And I guess the next channel line spot I got, it's about 147.70, 50. You know, could it happen? Easy. Is Bernanke going to deliver a dollar bullish statement? First of all, remember, it's the Treasury Department that handles the dollar. It's not the Federal Reserve. So he shouldn't even be commenting on the dollar. He could pull a Greenspan line, which I think he should. And just state, you know, I know it's the best interest in American policy to have a strong dollar. Boom, done, thank you. But they're going to try. Now, asset prices, obviously, I believe that the Fed is responsible for. By pumping so much liquidity in the system, all the money, remember, all this money that went into QE2 and all this liquidity that's pumped into the system, all the banks have on the balance sheet, you know, part of that money they've been investing overseas. You know, in Bank of America or Citibank buying an overseas branch, they're using our money to buy something overseas to make money from. Well, that's capital flows over there. And the bottom line is, as those economies do well, those people are going to spend money. As those employees over there make money, they're going to spend money. And that's also going to cause prices to go up, demand for more things. And then, you know, obviously those people buy a lot of silver and gold too. They hoard it. So you cannot say, in my opinion, you cannot say that Bernanke is not responsible for the higher commodity prices and inflation that's been going on. You know, crude prices, I think that has a lot to do with geopolitical, macroeconomic. There's tons of supply out there. So, but you look at this euro dollar chart, it's gone. Gotta be long. No way about it. Listen, you could be short at 47.50. I have no problem with that. But technically, you gotta be short this thing. Long this thing. And I'm not. I am going to look to be short at 47.50 if it hits it tomorrow. Abso-freaking-lutely. And this dollar yen breaking a 3-day low looks terrible. Late day sell-off. Bond yields even coming in. Bond yields broke. We're at 332 in the 10-year. You know, the market's pretty much telling us Bernanke is basically delivering. And maybe even the people in the know. Because you certainly would think that there was leak, some sort of leak based upon today's action. Or this is the biggest suck you in rally. We're going to have continuation tomorrow in anticipation of Bernanke being a dove, pumping more money into the system, saying basically, screw you to the world. I'm doing my own thing. You do what you think is best, but I'm doing what I think is best for the U.S. Not caring about macroeconomics. And just continuing to add liquidity to the system. And I got to tell you, based upon the jobless claims that came out the last 2 weeks, it does make logical sense that this is going on. But I don't think that he's going to deliver what everyone thinks. I think what he might do, what Bernanke might do, is become more of a hawk on inflation. I think he might give in to the inflation hawks. Should he do that? He might still say he's concerned. But what if he says the economy, I think, is strong enough to maybe handle it? I'm more now concerned about inflation than I am growth. Wow. I mean, when you take a look at the corporate earnings we've had, so this dollar yen, again, it's going to break, but I can see dollar yen getting to 81 and reversing. Big time. I think there's a chance that he delivers a somewhat more hawkish view of inflation, saying, I'm concerned about the inflation data. If inflation were to rise radically, I would have to change my thinking. Maybe he says something like that. The dollar would explode. The stock market would collapse. You would get the monster reversal you're looking for. And they're breaking it out, and now they're sucking in the last retail person. The market's sucking in the last bear to capitulating, because you can't be short the market now if you're a bear. I mean, technically, this thing is so broken out. We just see you can't be short. I mean, look at this thing. You want to sell at 1370, 1360 on the S&P, but certainly not here to be short, unless you want to take a lot of pain. Cable again, terrible number, holding relative support, coming in nicely today. But I see no reason why cable's not going to come in a little bit more, maybe even test that 10 exponential. I mean, we take a look at what Euro Sterling's doing here. Breaking the hell out. Oh, baby. We said it was a possible head and shoulder. We said it was a wedge. And it's breaking out. It took out 89. It's a BOP. It's a buy on pullback. I think we could be really heading up in this Euro Sterling. I think cable's GDP numbers are going to suck wind tonight. I mean, that was a paltry number. Other numbers of interest yesterday, obviously today. Consumer confidence 65.4. That's part of the reason why the market broke out more. S&Ps are strong before it. But, again, Richmond Fed out of the U.S. a disappointing 10. Again, and Case-Shiller negative 3.3%. Worse than expectations. Supposed to be down 3.2, but still not so bad, I guess. It's got to be a lot worse. Tonight, we do get tons of data out of Australia. Not tons, but a big number. Consumer price index supposed to be at 1.2%. I think this is going to be a big one. I mean, that PPI number was big. Oh, baby. And again, another outside day. Listen, I'm long this thing now. We're able to get long that thing at 25. No, the Aussie really, while it did break in Asia, was holding up nicely with the futures up. The only reason why really it didn't explode because metal prices gave a little bit of a pause. But last I checked, silver's down 10% from the high. And that's a bit of a buy signal for some people. So with this pole, with this flag, with this body of the flag, we're looking at 108. Well, 109. Easy. It's just going to go. I mean, this is now off to the races. Now, again, I am looking for a reversal tomorrow. But I'm certainly not going to give back my day if I'm right on the long side. I want to be long, and then I am looking for a shocker. An absolute shocker. That he changes his mind, Ben Bernanke, and is going to burn your ASCII with a somewhat hawkish tone. Somewhat. He's going to change his view on inflation. We had Kimberly-Clark this week, Coca-Cola to an extent, major manufacturers not able to pass through price increases. We got demand from China still very strong. We got corporate profits strong. That means they're going to be able to give people raises. What if wages go up? That's another big worry. Wages, if corporate profits continue to go up, the worker's going to demand higher wages. I mean, it's a joke. How then, not giving wages, but they're just making money for a rainy day or a shareholder big dividend. Microsoft increasing wages to keep talent. You're going to start seeing stuff like that happening. And then we start talking about hyperinflation because that, stagflation is one thing, but at some point it becomes parabolic. Dollar Canada, I don't know. I'm short it. I think it's going lower. Got a decent price. Almost an outside day. I'll tell you what, we take out 94.50 and say goodnight. Remember, free Friday, we got no spots left. Free Wednesday, we got no spots. Sorry, those of you people that emailed in late. We're pretty much full. If you want to send me an email as a backup, if we don't have as many people show up as supposed to, which usually always happens, so feel free to email me just in case. Take a look at the Aussie. Again, outside candle, it's gone. To the moon. New Zealand, same thing. Double bottom, didn't really take out previous day low, barely. New closing high. This thing not stopping. Looks like it's going to be 81.20. Bada bing. Bada boom. But I certainly think those levels we should be looking to reverse. And unless metals really explode to new highs, which I don't think they're going to. Possibly tomorrow on Bernanke. But remember, If rates go up, if for some reason that 10-year reverses and we shoot through 350, you're going to see gold prices collapse. Remember I said that. And silver. Absolutely. I'll tell you, what amazes me is everyone says flight to safety, but Euro Swiss still nowhere. I would have thought Euro Swiss would be up. I have no position in it, but I still can't figure the Swiss franc out. For the life of me, I still can't figure it out. I even take a look at Euro Yen, another one. You would think with the stock market exploding, the short side would have gotten killed. Dennis Gartman calling for dollar yen 100, a hundo. Let me tell you something. If we do get hawkish comments, it is probably going there. It is probably going there, 81. But first, tomorrow, it's going to 81. Then maybe we can explode. But again, if I'm wrong, stock market up and away to the moon, Alice. I think it's going to be up into it. And, yeah, we got London GDP. We got U.S. core durable goods. It doesn't make a difference, in my opinion. And if anything, durable goods have lagged the manufacturing numbers. And now we're seeing a slowdown in the manufacturing numbers. Maybe durable goods will be better. But looking for a big rebound up on the core side, 1.7%. Headline's supposed to be up 2.1%. Get crude inventories, GDP. Now remember, Free Wednesday, that includes all of tomorrow. That means tomorrow in the morning, 8 a.m. Eastern, and I will be back live for the statement. And I'll be back live again for the press conference. 12:30 statement, 2:15 p.m. press conference. Boy, this is going to be fun. And we get also, by the way, rate decision out of New Zealand at 5 p.m. Eastern. No change expected there. But this London number, GDP, is supposed to be up 0.5%. I don't buy it. And again, Australia, I think it's going to be up big. Trim mean supposed to be up 0.7%. So when you look at these numbers, tonight potential in Asia could be the opposite of last night. I'm making the call, baby. All right, team, I'll see you back at 5 o'clock or close to it. Maybe 4:45. Again, if you have any questions, feel free to email me, info@globalfxradio.com. Andrew Spanton, Global Markets Radio. What a day. Talk about getting chopped around, but you know what? At the end of the day, how'd you do? Did you reverse? Did you try and fight this market? Well, I hope you didn't. As I've said, over 1340 to the moon. But I am calling for reversal tomorrow on a more hawkish burn your ASCII. Oh, baby. Have a good night. Heaven help us.